Good morning, everybody. Today is Wednesday, September 4th, 2024. Welcome to the live trading room. I'm Tim the Trader. Glad you're all here. Hope you had a lovely evening. Weather is starting to cool down here a little bit. So very nice evening last night. Hot yesterday, but still very nice. Anyway, here's yesterday's charts. As you can see, it was pretty much a downhill slide all day long. If you had held a trade from the beginning to the end, wow. Let's see, if we'd started at 473, we ended at 462, so an $11 run. Holy smokes. Crazy. Anyway, that's yesterday's charts. SPY did, or Q, not SPY, we're on Q, did end at 461.92, and we're currently at 458.49, which means that we have a gap opportunity, a gap play opportunity. Gap fill will happen at 459.41. I'm going to write that down. 459.41 will be the gap fill and trigger for a gap play, for a call gap play this morning. Let me let in a couple of people here. There we go, and move on up to right now. There we go. And we are trading not the fourth, but the fifth. Let me let in Rita. We are trading tomorrow's expiration, which is September 5th, 2024. And we're starting at the money at the 458 on the call side, the 459 on the put side. We have just a little bit under 1 million in pre-market volume. Would be lovely if we had another directional day today. Yesterday was great. 5 trades plus 5 trades, all positive, plus 94 yesterday. It was a great day yesterday. Hope you all had a great day as well. And with that, I'm going to go ahead and throw it over to my good friend, Mr. Keith Frampton. Good morning, Keith.
Good morning, Tim. Good morning, everybody. Yeah, what a day yesterday. I was only around in the morning, only could do 2 trades yesterday, but up 79 cents for those 2 trades. So great day yesterday. We had some pre-market announcements come out this morning, some good trade balance things, and they were pretty much all as anticipated, plus or minus just a little bit. We will get a factory orders report out at 10 o'clock today, as well as a JOLTS, which is a job openings and loss report coming out at 10 o'clock also. At 2 o'clock this afternoon, there's a Fed Beige Book, which is the interview of the 12 Federal Reserve districts. Each give their outlook on what how the U.S. Economy growth is. So that can move the market also at 2 o'clock. And I am trading next Friday's expiration, that is the 13th of September, on any trades that I'm doing today.
All right, very good. Yeah, that Beige Book comes out, could be an important market mover. Keep an eye on that. We will be coming back at 3 o'clock today, and Keith is going to be doing a lesson today. So you don't want to miss that at 3 o'clock today. I think it's great information. You don't want to miss it today. So let's make sure our charts are all set up. We have about 30 seconds before we start trading here. Let's let some other folks in, and make sure you have 20 cents between each of your hash marks here on each of your charts. I've got my active trader set up, ready to go, and I'm set at, already got the 458 on the call side. Whoops, let me mute somebody. There we go. And we got 10 seconds. Stand by in 5, 4, 3, 2, 1. There we go. Let Stephen Ritchie in. Actually, I'm going to put the 459 set up in my active trader. There we go, just in case. And as always, we're looking for that first little breakout that can happen in the first couple of minutes. Yesterday it happened and it just kept going. It was downhill and just kept going all day. And looks like we're starting all ready to push down. Again, be at the 459 on the put side, if that's the direction we're going to go. And let me see if we've got the broader markets up. I know everything was down in pre-market, and it booted me out of my feed. Let me reestablish that. There we go. All right, so Dow is down 39, Nas down 120, S&P is down 18. Let me see here. Let me mute out somebody. There we go. Okay. And well over a million, 1.6 million already in volume on the underlying asset, which is QQQ. Market maker trying the call direction here. And heading down the put side. So we'll just stay patient, wait for the market maker to get something rolling here. All we have to do is be patient, wait for our trade. It always comes around. So far, just first 3 minutes, just in a bit of a narrow range here. So the first couple of minutes of the market, the market makers are just trying to feel out the market. Retail traders, other market makers, and we'll always try to push price up and then down, kind of cycle through a narrow range until they find a trend, until they find a direction in which traders will start to trade. Thank you, Mark. So I'm going to head over to the call side, the 459 on the call side. We'll just watch it. Our 5-minute MACD about to cross over to the call side. Let's see if this call direction is going to continue. It looks like we're reversing already. Continuing up on the call side. So going over to the 459 on the call side. Stand by. Still moving. It's a bit expensive on the call side. The 459 on the call side. Let's see if that was it. Already reversing. I'm going to put a pseudo demand zone on the bottom here.
You're scaring me. I was just gonna do that.
Let's go ahead and add that in like so. Let me adjust this a bit because I'm really drawing sloppily. Give it an extra day. Boom, there we go. Might have a very nice demand zone forming here.
You mean supply zone?
Supply zone, that's what I mean. So the market maker pushed up, ran out of traders willing to trade to spend one more penny for that trade and having to reverse price. So we'll cycle back down.
Did that just fill the gap?
It sure did. Yeah, I wasn't watching. It sure did fill the gap pretty handily. See, there was a good gap fill there, and we didn't get into it. See if we're going to break through the demand zone. I'm going back. I'm going to the put side, guys, to the 460 on the put side. Negotiating with VWAP, getting through VWAP. Let's see if it's going to push through. All right. 460 on the put side. Now, still having problems with VWAP. We're about to cross on our MACD on our both our 1 minute and 5 minute MACDs are about to cross to the put side. Let me see. So it filled right about here, 459.41. Yeah, we'd have gotten 10, maybe even 15 cents out of it. All right, going back to the call side to the 459 on the call side. Maybe not. All right, I'm going to go ahead and put a supply zone in on the top here. Right there. And let's go ahead and put in the zone like that. Activate. And we'll give it an extra day. Let's change this color to red. Color more. HSV 60. Okay, okay. And price level, we're going to change that to red. Red is our color for the supply zone. There we go. Got a real supply zone in, and if price keeps rising, we may have a real demand zone in here as well. But notice how price has bounced off of the demand zone, tried 1, 2, 3, actually broke through the demand zone the first time through. And then the next 3 minutes could not quite get to the demand zone. So now we're heading back up the supply zone. Let's see if we're going to get a bounce off the supply zone or a breakthrough. All right, going over to the 460 on the call side, 460. Wow, big push up. Let's just make sure.
Crazy Ivan.
Yeah, let's just make sure this isn't a crazy Ivan. Broke cleanly through the supply zone with no problem.
Not a ton of extra volume on this minute either.
No. All right, going over the 460 on the call side.
I went ahead and got in on that.
Okay. Stand by on the 460 on the call side, guys. And a little pullback here. Probably won't last. All right, I'm going to go ahead and jump into the 461. And it passed me by. No, it didn't. It let me in finally. In at 331. Filled me on the downside, which I don't like. 331. And I will stay with this. I'm going to stay with this trade. Getting some profit taking going on right now. There we go. And let's go ahead and take profit at this right now. There we go. 343, 331 to 343. So we're hitting some resistance up here around 460.87. It's going to break through that level to continue up. And we're seeing a little bit of hesitation here by traders. What'll happen is traders will get scared and start dumping out of this call direction. But our 15-minute chart is looking good for continuation on this call. Gary's got a couple of questions we'll address here in a minute. All right, so getting some little bit of push up here. Just got to get the retail traders off the sidelines. There we go. Again, hitting that 460.84 level, kind of finding some resistance there. Now it's kind of starting to break through. Here we go. All right, I'm going back to the 460 on the call side, 460 on the call side. And I'm going to re-enter this 460 if I can. Oh, and it did it, filled it on the downside again. Hate that. Anyway, filled at 412. Believe we've got some good, strong upward momentum going. Up to 428. And I'm going to go ahead and take profit here, guys. At 431, 412 to 431. Took 19 cents on that trade. I'm going to go back over to the 460 on the call side again. Keith, you must be up to $1 by now.
No, I'm not. I'm up around 40 cents, but I still think there's room for this to continue.
Certainly looks so on the longer term charts.
Yeah, yeah. Now it's pretty much just back to break even.
Okay. So Gary asks, is there a difference in being filled on the downside versus being filled on the top side? Yes. So what's happening there, Gary, is when I was getting into that trade, price, I was using a call trade, so I want price to go up, but instead what was happening is it had passed by my entry price and then started coming down. We don't want to be filled when price is coming down when we're in a call trade. For obvious reasons, because we want that call trade to go up. Same thing can happen on a put trade, just the opposite. But it sometimes happens, it'll pass us by. Like for instance, if I was trying to get in on this minute here, the 9:48 minute, try to get in at 460.85, and then when I hit the button, the price shoots up real high, so it doesn't get filled. But then it starts coming down, and it fills me on the downside because I couldn't get canceled fast enough. Gary says, you don't mention stops much. Do you use stops at all? Yes, I do use stops. Absolutely. But in the very beginning of the market, when we have so much volatility, 85% of the time, a trade will come back. So we're playing a little longer game on that. And I've been reading on stops lately, particularly as it pertains to QQQ and options. And there's a good deal of thinking out there that says that our stops are way too tight already. But here's my philosophy on this, in that I want to get, 3 or 4 good trades in, and then I switch over to protecting that. That's when my stops will really come into play, is when I have decent profit. I mean, ideally we should be using stops all the time, but we're going to miss out on a lot of trades if we use a 30-cent stop every time.
And a lot of that depends on what the expiration is too. If you're going further out in time, 30 cents is probably way too tight.
Mm-hmm. Yeah, absolutely. When you're doing Keith's expirations, he has time. Time decay is not as big a factor for him. He can wait it out a little longer and let the market correct for him. But at least in the beginning of the market, the first 30 minutes or more, I'm letting trades ride longer past what would be a 30-cent stop, knowing that 85% of the time that trade does come back just because of the sheer volatility in the beginning of the market. I mean, we had 2 yesterday where we went past the stop, and they came back to be beautiful trades, big trades. So I want to welcome a couple of people just came into the room. I want to welcome you guys. There's new names there I don't recognize, but I'm glad you're here. And I'm going to give you a quick tour of what you're looking at. We use 3 charts in our system and Active Trader. Upper left is a 1-minute chart with a volume subchart. Below that is a 5-minute chart that we do our zone system on. You can see our red and green lines. We use a zone system as part of our trading philosophy and how we make trade decisions. I'll get into a little bit more about that a little later. We can put in a supply zone up here. It's a little rough, but it can go in. And then the lower right is a Heikenasi 1-minute chart with a MACD subchart. The 5-minute has a MACD subchart as well. Whenever the blue line is above the gold line, we know that we're, in a call position. Whenever it is below the gold line, we're more in a put position. That is looking for a put trade. Now we use zones, as you see here, red and green zone, because we mark these because price tends to bounce off of the zones. And that's where we look for a trade, is off of those reversals off of zones and also the breakthrough through zones. And so far we've had 2 good trades, up 31. And in options, if you don't know, the way that you figure out profit is you take the number of contracts times the number or the gain in pennies, most likely, and times that times the number of contracts, and that's how you get your profit. So if you're trading 10 contracts and your trade profits 10 cents, you've made $100. But I'm glad you're here. Gary also asks, is there a difference in being, oh no, already answered that. His first question was, with any degree of consistency, do the today's numbers follow yesterday's numbers in terms of direction at the opening? No. Anything in the market, anything can happen at any time. Price can move any direction at any time, up, down, or sideways. It doesn't necessarily relate to yesterday's numbers, unless there is a longer term uptrend or downtrend, then there is a relationship. When you go further out in time, there is a relationship from day to day. But for us, since we trade in such short time frames, anywhere from 20 seconds to 10 minutes, it doesn't so much affect us. We trade the trend. That's what we look for. We look for breakouts and trends in what we do. And we're assisted in those decision makings by our MACD on the bottom and our zones, which, by the way, we have a new one to put in. So I'm going to duplicate this zone. Bring it up here. I'm going to duplicate the price level and bring that up here. So
Up at the top.
Thank you, sir. Pop at the top's coming. And for those of you who don't know, pop at the top is generally a move that happens right at the top of the hour. Could be an algorithmic move, could be based on reports that are coming out or news that's coming out. But we've noticed that we generally get a move right at the top of the hour, which is coming in about 20 seconds. And we call that the pop at the top. And there it is. Wow. Wow. Big push down. That is a big pop at the top right there. Now, the market will probably recover from this in a minute or two, but huge push down.
Wow.
Yeah. Keith, what came out at 10?
Factory orders came out actually better than anticipated by quite a bit. And the job openings and losses came down less than anticipated by quite a bit.
Boy, whatever it is, the market makers really decided to dump right there. So for those of you, for folks who are new or just joining us, that was a massive pop at the top that just happened. Look at that, the volume up over 500,000 that minute. All right, I'm going to head over to the call side to the 458 on the call side. I'm just anticipating some recovery that generally happens after the pop. Let's see if it breaks through. Yep, it's breaking through. So 458 on the call side, stand by. All right, I'm jumping in or trying to. No, passed me way by. Let's cancel that. See, this is generally what happens after a huge pop at the top is we get a retraction, reversal. So going back over to the 459 this time, 459 on the call side.
Enter or no?
Not in yet, Ashim.
Thanks.
All right, stand by. I'm going to go ahead and enter or try to enter. And got filled on the downside again. There we go. Oh, got in at 398. I'm going to go ahead and take profit here. There we go. 422, 398 to 422.
Same here, exactly same.
Got the same. All right. Plus 24 on that. So up 55. 3 good trades in a row. Of course, it's what we expect. That is our mindset. We expect to win. Man, still can't get over how large that pop at the top was. Heading back down. All right, let's go over to the put side. I'm going to go over to the 460 on the put side, 460. Get some charts back in view here, sorry. Gary, filling on the downside, it's not necessarily a bad thing. It's just we don't want to start a position if we can, being 10, 15 cents down just right off the top because it got filled on the downside. But if we, picked our trade correctly, we've checked all our indicators. We're in one of our sweet spots, which is near a zone. and we're seeing momentum in the right direction, then generally we're okay.
I don't know when or where this guy said it, but the Atlanta Fed President Bostic says officials can't wait for inflation to hit 2% before cutting. I don't know why that would have pushed it down, but
The thing about the pop at the top is we just never know which direction it's going to go. If we had that little bit of insight, we'd be jumping in right before it. Okay, coming back over VWAP, trying to. We've got 7,100,000 in on the underline. Let's see what our broader markets are doing. So Dow is up by 35, NAS is down by 107, S&P is down by 9. Not huge numbers. All right, look on the 5 minutes. See how, again, we're bouncing off of that zone, off the supply zone. In fact, I need to change the color on that to gray because it's a minor zone now. So we're going to change that to gray at 60%. And we'll change the price level to gray as well. There we go. Now it's a minor zone. Yep, this is looking good, Keith. Price coming up.
yep. And I had doubled down on some of this before it pulled back again.
Oh, okay.
But I'm back on the positive range again.
Just got to break through the supply zone.
Yeah.
It's reaching for it. Guys, let's head back over to the call side. I'm going to go to the 460 on the call side, the 460 strike call on your option chain. See how price in that last minute came right up to it and bounced off. Boy, we've had pretty high volume relative since the pop at the top. Just got to break through the supply zone. It wants to.
Wouldn't hurt me at all.
No. Is that amazing? The pop at the top, as far down as it went, it recovered completely, which is more the norm than the exception. Okay, heading over to the, actually over to the 461 on the call side, guys. 461, stand by. All right, let's go ahead and try to enter this. It should be filling me. There it goes.
I
right.
got out of my double down
Okay.
contracts from 763 to 830.
Nice.
See if I can get out of the other one up a little bit higher.
All right, still in this trade. Let's break back through. Not that direction, the other direction. Mm.
Come on, turkey.
All right, has hit the minor zone and may bounce off of the minor zone, getting some pushback now. Again, notice how price is bouncing off of a zone.
There we go. That's the direction we want to go.
Market maker probably dipping down to fill the warehouse again. What our broader markets are looking like. We've got I don't want to see that position. Over 8,500,000 in on the underlying. Dow is up 106. NAS is down 44. S&P is positive by 1. Starting to climb out of this hole. There we go. Let's break through the supply zone again. Let's get on up there. Come on, you can do it. All right, we just had a couple of new people just join the room. Welcome. We're in a trade right now. We're in a call trade. Bounced right off of the zone, getting a pretty strong push down here. Kind of sticking in the zones here.
We're down to VWAP there.
Mm-hmm. Hopefully we'll bounce for up the VWAP. This could be a crazy Ivan. Crazy Ivan is when market maker pushes price down, urges it down or up in a pretty quick motion, and then the very next minute reverses it right back to where it was. We call that a crazy Ivan. Market makers probably taking this down to take out stops, pick up those positions before continuing with the call direction that they were in originally. Sometimes they need to dip down, pick up positions before they can continue. But occasionally that backfires on the market maker. They get such a strong push in one direction that FOMO starts to take hold and people start or traders start jumping in on that direction. But again, just notice how price is really respecting the zones, which is why they are so powerful. Our zones being the red, the gray, and the green demand zone there on the bottom. Spot 355. Come on, let's press that price up.
Come on, get on up there.
There you go, Keith. Just need a lot of buyers to come into the market right now, start bidding up this price. There we go. Come on up. Come on up. Come on up.
We had a crossover on both the Heikenasi MACD as well as the 5-minute MACD, or a MACD there.
Yep, back to the call side. That's good. How are we looking on the longer term chart?
The 15-minute is going back up again, as well as the 30-minute.
Okay.
Excuse me, I said it's going up.
Mm-hmm. Oh, it heard you. Yeah, we're in a longer term call direction and we will get there. But this morning, so far, we've been staying pretty tight inside our zones. You can see how often price has been bouncing off of the zones. If I weren't already in a call trade, I may even be looking to get into a call trade, but probably wouldn't until it breaks through the supply zone, which is the red bar.
Yeah, I would agree.
If we can just clear that,
Yep.
we can continue on up unimpeded. Let's see, we got 9,400,000 in on the underlying while we wait for this trade. And Dow is up 99, Nas is down 54, S&P is gone negative by 0.5 point.
Come on, get on up there. Here we go.
There we go. Breakthrough. Breakthrough, breakthrough.
We got my exit point just a little bit north of that zone.
Mm.
Come on, you can do it. Yeah.
See, what's happening here is the market maker is just rotating price through the zones. I mean, back and forth within the zones, and not really catching on fire with retail traders.
No,
Yes, we
there
got-
hasn't been much volume there recently.
Yeah. So, and the market maker will continue to do that until, a trend develops. And we do have an upward trend for sure. But we've got to break out of the zone in order for price to continue moving up.
It's one of those, if it breaks through, I probably should cancel my order and let it ride up some more, but I've been riding this for quite a while that I just as soon get out of it.
Yep. See, watch what happens if we can break through, or the market maker decides to just break it through, it will rise pretty quickly beyond that. And let's see if the market maker does that, puts a push on. And so many times we've gotten out of these trades prematurely, although, the trade is aging. So we've got time decay to consider as well.
And I have less worry about that because I'm over a week out from my
Yeah.
expiration, but still. Come on, get on up there.
There we go.
Well, it's getting close. Come on, come on. There we go.
There we go.
And I'm out.
And I'm taking profit. Fill me. There we go. Out at 355 to 361.
So I have two trades. I'm out. I'm up $1 and a penny.
Nice. I've got 1, 2, 3, 4 trades up 61 cents. See, now this is exactly what happened.
Yeah.
Once he punched through, it would take off.
And now we're above yesterday's high too.
Mm-hmm.
Yep. I'm just impatient.
Well, I was trying to cancel my because it didn't fill for the longest time and it moved past it. And I was trying to cancel it and couldn't get it canceled fast enough. But anyway, just kind of recap, we had to ride that for a while, but the momentum is toward the call side. But you can see once the market maker was able to finally punch through the supply zone, there was a big push that happened. Retail traders were waiting out on the sidelines, waiting for it to break through. Of course, most of them don't know what it's breaking through because they're not using our zone system. So they don't have a clue what it's breaking through. And then once it did, it took off for almost $1. So everyone can just take a big sigh of relief and relax. So, yep, up 4 trades, all positive, plus 61. Good morning. So those of you who are joining us today for the first time, let me explain a little bit more about our zone system. What happens is whenever price, and we do this on the 5-minute chart. So look at the 5-minute chart, which is the lower left. Whenever price comes to a point and there's not one other trader literally on the planet who will spend another penny for that, price reverses. The market maker has to start taking the next lowest bid and the next lowest bid, and then the downward cycle begins, and then it becomes oversold. And at what point is it gets down to a point where there's not one other trader willing to sell it for another penny or take a penny less, price reverses and starts going up. Well, we mark those points. We call those price agreements. And we mark those points where they happen, up and down. The bottom is green. It's called a demand zone. The top is called a supply zone. And this middle one was a supply zone, but now it's just a minor zone. But it still has power. It still has gravity. Price still will bounce off of it as it did a number of times here earlier. You can see in that 5, 10, 15, 20, 25-minute period, each of those 5 minutes, price came down and bounced off of the price, off of the minor zone. So what we look for with our zones is we look for either reversals or these kind of punch throughs that we get, and then acceleration, momentum takes place. So I'm going to go back to the call side, to the 462 strike call. Now, when those of you who are new here, what you don't see on my second screen is my option chain, which shows me all the prices, all the strikes, and all the prices. And I trade off the option chain. Little crazy Ivan action happening right here. So far have not had a loss this week.
That's great, Tim. Very good.
Thank you.
Same here.
That's awesome, Keith. Just a reminder, folks, we come back at 3 o'clock this afternoon. Keith is going to do a lesson this afternoon, and then we will trade the rest of the hour after that. Do keep, and if you're trading today or you're going to continue trading after the session, do keep an eye on the 2 o'clock gray book release.
And in 2 days of trading so far this week, I'm up 24.5%.
Wow.
And I'll talk about that this afternoon about how we go about those numbers.
Two o'clock, right, Tim?
Yes, sir.
Thank you.
So we are continuing up into the call direction. A little bit of reversal happened there, but clearly we are getting back the losses yesterday.
We may getting a new supply zone we can put in here too.
Yes.
Another minute and a half to go. Or not. That's why we
Not.
wait until the end of the 5 minute.
Yep. Wow. All right. Let's go to the 462 on the call side. 462 strike call.
I got out of that last call at $8.30. It was just up to $9.10.
Wow.
Should have trusted the charts to stay in.
Well, you after being in it for so long,
Yeah.
you're like, well, I'd rather leave with profit.
Absolutely. Yeah, I'll take 13% in a day anytime,
Absolutely.
even though I didn't ride it the whole way.
It's 25% in 2 days, folks. I just don't know where else you could do those kind of numbers
Legally.
legally.
I met with my accountant yesterday and he's very intrigued with this and he wants me to come back up at lunchtime or something and talk him through what we do.
Cool.
Yeah.
Bring them on.
Hey, Tim, if you have a few minutes after we're done with the session here, if I could give you a call, a couple things I'd like to work through.
Sure. A bit of a pullback right now, so we'll stay out of a call trade for now.
Yeah, I guess technically we could move that supply zone up to
Oh,
the left if
yes,
can.
we can, can't we? So let's do this. We're going to duplicate that zone and we'll bring it up to here. See if this stays. Yeah. We'll remove that for now. All right, price is climbing again. So just keeping an eye on the 462 on the call side. All right.
Thinking Aussie MACD's getting a bit high.
It is.
As is the 5 minute.
But we have been getting these regular little pullbacks, which
Yep.
takes some pressure off,
Yep.
but still. Again, another pullback. Hey guys, excuse me just for a minute. I'll be right back.
Coming back down, trying to get below that supply zone again. And Tim would be looking at a put here. Probably the 463 or 462 put, either one of those.
Okay, I'm back.
I was saying, Tim, we've had a pullback and you were probably going to be looking at either the 462 or the 463 put.
Yes.
My longer term ones were still in the uptrend, so I probably won't do a put here.
Yeah, probably stay out of the put. Let me see now. I'm going to duplicate this. Bring this up. Yeah, I've got a couple more minutes, but it looks like it's a pretty solid push down.
Yeah, probably won't put an intermediate zone where you just moved it from either. It's pretty close together.
Mm-hmm. That's not what I wanted. I want to duplicate this price level. There we go.
So what's your thoughts on a put here, Tim? Well, besides the green that just came in.
I think I'm going to stay out of it, just looking at the longer terms.
Yeah. I think that's wise. Don't want to give money back either.
No, absolutely do not. Change this to a minor zone. And we'll change the color of the price level to gray and be done with it. There we go.
Or about an hour and a half into the market, and it's only 11.7 million underlying. Not a huge volume day.
Yeah.
Like all the markets, Dow's up 161, Nasdaq's up 26.5, S&P's up 11. So all green now.
Yes, they are.
Yeah, Nasdaq's come back quite a ways.
Wow, look at that. Yeah, you're right. All right, that call is coming back, so I would wait till it breaks through before getting into another call trade. if it does break through, or if it's just going to bounce off here for a while.
I was just looking on my phone what the Qs were. Q's up $1.01, and that's what I'm up today too, $1.01.
So you got every bit of it.
Yeah, boy.
Yeah, it was no fun watching that pop at the top, was it?
No. It's funny though, Tim, a couple weeks ago, I would have gotten out of that for a loss.
Yep. Yeah. Yeah, I mean it's becoming clear that the more we trust those longer term charts, the better we're going to be.
Yep. Well, that'd have been just like here, Tim. Probably 2 weeks ago, you would have gotten into a put there when it was getting down.
Yeah.
But looking at the longer term, it's like, no, 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 no.
So it's just a way for us to, folks, just a way for us to get a little longer perspective on the trades that we're getting into. We always want to be on the correct side of the momentum, on the correct side of the longer term trend. Because if that trend, even if we're moving in a put position, but the longer term trends are showing us in a call position, we know it's going to get back there. We know eventually it's going to get back there. See, watch this. So punching through. Let's see if this takes off or if it's just going to reverse. Now, it's not normal for us to punch through the first time and continue going, but we've had that happen several times this morning already when we have established a new zone. See? And this one may stay through.
Mm-hmm. I'll be right back, Tim.
All righty. Guys, I'm not going to get into another trade for the end of the hour, but if you want to consider a call trade at this point at the 463, you might be in a real good position to get into a call trade right now. Of course, it reverses right as I say that, but I don't believe that reverse is going to amount to much. We've clearly established a longer term trend of price rise. And that should continue for the foreseeable future. I mean, foreseeable future, I mean the next hour or two. Still rising. So if you got into that call trade, you're looking pretty good. All right, guys, I got the top of the hour. We're going to go ahead and wrap it up for this morning. Just to recap, 4 positive trades plus 61. Keith's got $1, beating the pants off me again. And just a reminder, I'll probably leave Zoom up all day and the charts up all day. I don't know if I'm going to have time to adjust them as they go along, but they will be up. And remember, we're coming back at 3 o'clock today. And Keith is going to do the lesson, and then we will trade the rest of the hour. So that's it for today, guys. Thank you for joining us, and those visitors who came in today, thank you for coming in and checking us out. Please come back tomorrow and do some trades with us. We've had a great 2 days, no losses in the last 2 days, so we're doing great. Keith, thank you for everything, and that's it, guys. That's it for me. I will see you this afternoon.
Okay, see you this afternoon.